Let's discuss the trading session of yesterday and our outlook for today. As expected, the US stock market opened a new trading week with a steep decline, extending losses for 3 days in a row. Today, the New York pre-market suggests a cautious recovery. Are there any headwinds to gain in stocks? Let's try to find out. The Dow Jones shed 2% on the first trading day of the week. The Nasdaq plummeted by 4.3% and the S&P500 sank below 4,000 points in a midday and rebounded later on. The index lost 3.2% to close at 4,013 points, the lowest level of the year and the steepest three-day fall since the pandemic outbreak. The pre-market today suggests some hope. The major stock indexes gained 1 or 1.6%, and the S&P 500 is expected to trade in the corridor between 4,000 and 4,080 points today. Wall Street is poised to regain some of its previous losses. It looks like a faint attempt to recover amid the lack of bad news and a technical correction after a slump. It's too early to predict the bullish momentum until investors get to know the US CPI that is due on Wednesday. Analysts warn about easing headline and the core inflation in the United States. The CPI is expected to slip to 8.1% in April from 8.5% a month ago on the back of falling prices of energy and second-hand cars. If the prediction comes true, the stock market might revive and move higher. Otherwise, stocks will accelerate the downtrend. The reason of corporate reports is coming to an end, so investors have no other sources for optimism. The Bank of America mentions weak demand the most frequently since the second quarter of 2020. Besides, the overall corporate sentiment is gloomy. For example, Tesla suspended its operation in Shanghai due to bottlenecks with spare parts for its electric cars. It does not add to positive sentiment. Today, investors await financial reports from 20th Century Fox and Occidental, as well as the comments from some Fed's policymakers. Traders will focus on their comments, trying to puzzle out rhetoric among policymakers and further policy moves. The US dollar index topped out at 104.18 on a Monday, the highest level since late 2002. A 0.1% downtick followed afterwards. The greenback is standing tall, trading at nearly 103.60. The intraday corridor for the index is seen between 103.40 and 104.00. The US currency is propped up by inflationary concerns and the risk of a slowdown in the global economy. The same factors are pushing yields of 10-year treasuries to fresh historic peaks. Yields have briefly touched 3.19%, the strongest level since late 2018. Today, the US dollar index is dipping for a while. Despite the fact that inflation is likely to ease, it remains close to the strongest level in 4 decades. The Federal Reserve is still resolute to raise the funds rate and taper liquidity despite the risks of a slowdown in the global economy. Thus, the US dollar is still viewed as one of the most lucrative safe haven assets, with a bullish outlook. The USD CAD pair surpassed the landmark level of 1.30 on Monday for the first time since 2020. Amid a dip in the US dollar, the currency pair might decline below this level today, and the expected corridor for the pair is defined between 1.2940 and 1.3020. The currency pair climbed to the 2-year highs on a Monday amid the broad-based strength of the US dollar and the fall in oil prices. The upbeat non-farm payrolls cemented expectations of aggressive monetary tightening, thus putting pressure on risky assets. Oil prices tumbled almost 6% intraday due to the persistent fears of a low global demand, mainly because of the lockdown in China. Brent is trading today at $106 a barrel, and WTI went down to $103 a barrel. And in this context, the loonie is giving in to its American rival, though it could regain some footing today ahead of the US CPI. The crypto market discouraged traders yesterday. Bitcoin sank to $29,731, the lowest price since July 2021, after its 12-week slump last week. The flagship crypto dragged other tokens down. Ethereum, Binance, Solana, and Cardano plunged 15% last week, and the favorite Dogecoin of Elon Musk lost 10%. Moreover, crypto-related stocks such as Coinbase, Robinhood, Hive Blockchain, Marathon Digital Holdings, and Riot Blockchain also went down. Analysts say that despite the correlation with the high-tech Nasdaq, the crypto market might be more vulnerable to global risk aversion. Sharp contraction in the Fed's liquidity might knock down the crypto market that flourished during the COVID crisis. The recession threat looks more realistic. The stock market has its own history of how it survived recession. However, the crypto market is very young. It's hard to predict its future under the current conditions. As for the short-term forecast, Bitcoin is going to regain its footing and settle above 30,000. It's expected to trade in the corridor between $29,700 and $32,900 today. To sum up, markets are sensitive to news and remain volatile. Will the US stock market be able to regain previous losses today? Time will tell. We wish you profitable trading and gainful strategies. See you tomorrow.